Yeah, yeah, fantastic. You guys are very clocked on, fully aware what's going on. This is the reason why, you have a sound system now, ingrained with understanding what the successful professionals are looking at, and that's the most important thing. So, very happy with that response. So yes, all of that information, guys. So Chris said above 80 RSI on a daily. Yep, there's a divergence there as well. Bearish divergence, Chris. Roland said the dollar was up. Yep, if we take a look at the US dollar. There, yep, we saw during that period here, we saw a retracement in the dollar, and that's why that kind of gave an opportunity for a bit of a sell-off, a big sell-off. Okay, there, correct. Psychological, Roland said psychological level of 1800, yes. And yeah, and then monthly highs, yeah. So you can clearly see at this level, I could send you so much information of analysts from top brokerage firms, banks, when the price was 1780, saying, yep, this market's going to push higher. It's going to test 2000 by the end of the year. It's going to test 1900. We're going to get to this previous high, and this market's going to go. Then what happened? Pop. So yes, we had the high, so of a market top correction. We had the resistance, two previous highs. We had divergence. So everything was like signs of okay, this market might roll over. But it needed something, okay? It needed something to actually push it off the cliff, let's just say, yes? And what do you think was the catalyst? What do you think enabled for this market to really take a sudden turn and a pretty big sell-off that occurred here? What happened, guys? Yes, what type of news came out? Do you recall? I remember this vividly because I was watching it. What type of news do you reckon can actually affect a massive sell-off and then a start of a move the other way? Yeah, that had been going on, Chris. No, you're right in saying that had been going on for a while, but that wasn't the main reason behind this drastic turn. Anything else, guys? Yeah, no problem, Roland. Um, is there anything else, Chris, that you can find maybe? Any reasons why you think, on top of the technical strong resistance, added with yes, physical cliff wasn't really a massive move up for this market? Exactly, Chris. The main reason was the employment situation. Okay, because it was expected the current rate before this move was the employment rate was 8.2% unemployment rate. Okay, and then what happened? Everyone expected that it was going to be 8 point, above the 8%, and this was the last unemployment rate before the elections, if I recall. No, one of the last, actually, the second to last, But this was the main, because the next one would come like days before the election, so that wouldn't have a massive impact because the majority of people would have voted already anyway. So what we had here, we had that it was 8.2%, and then basically we saw the news came out, and it came out as 7.8%, which basically meant that the unemployment rate had decreased, which was a massive surprise. And then we saw a move on the gold from the highs of, let's just see here, from the highs of 1795 to 1770 to lows of 1772. Okay, and then after that we just saw a continuation. Okay, continuation, because that took the market by surprise, right? And we know the reason why gold was increasing, because it was good as a inflationary fear. It was good because QE3 stated, Ben Bernanke stated they're going to inject more capital, $60 million of mortgage-backed securities, and they will continue that throughout the whole of 2013, looking at keeping the interest rates low until 2015. But once they actually showed that the results in the economy had changed and it was positive, that was showing some growth, that has a negative impact in gold, because then people might fear that the Federal Reserve may look at stopping the mortgage-backed security earlier because of the news. So that was the reason why people then started to close their positions, sell off, and we saw a big sell-off from 1795 to 1698, so about $80 push, and then lower. So it's about $100 move here, guys, from October to November. Quite astonishing. 1 month. Then we saw a bit of a pullback. So this is when it popped down, I think, to 7.7, if I can recall. And then we saw a bit of a recovery here, and then a continuation to the downside. And this is where the market is now. So then we heard the market was 7.8%. They had stated this 2 days of a sell-off was because they had stated that the Federal Reserve may look at stopping the mortgage-backed securities. That was in the minutes that came out from the previous interest rate decision. May look at stopping the 2013 mortgage-backed securities earlier than, not just for the whole of 2013. And basically, that's why the market sold off from the highs of 1691 all the way down to 1626. So we saw, like a $67, $68 move to the downside, big sell-off. And then we had news that came out here that stated that that the recovery is still slightly slow and getting a pop-up. So gold is all over the place. There was a nice divergence here, pop-up. Okay, Roland, yep. So we just stated very quickly that this market topped because the unemployment rate came out as a surprise. Initially, it was 8.2%. Then it came out 7.8%. That was positive for the economy. And then, they're showing good signs that more people were in jobs. And obviously, with gold, it's inflationary fear. When the economy is bad, people look to buy gold as an asset. So this market sold off, and it dropped $100 in about 1 month. Okay, because that was a massive surprise, and that was like the second to last non-farm payroll before the elections. So they thought, okay, basically that means the Federal Reserve may be looking at cutting back on the mortgage-backed securities, on the injection of money, and also, they'll keep the interest rates low till 2015. So that was the case in that scenario. So now we're in a situation. So I just wanted to show you the two areas here between the consolidation period based on the fundamental news that meant that this market looking at going higher, and as we said here, the two areas, the market retraces slightly in tight range in this scenario, dollar yen. The number two theory, the market top, we saw that we had all of the technical levels in place, but you can see with the technical levels, before that it spiked higher, right? There's a divergence, and it sold off a bit, but it recovered again. So we needed something fundamentally to really push this, to really break this trend line, and to see a new swing, and that's exactly what occurred here. So Chris said, "Do you think this cliff is fixed? Just kick down the road?" Yeah, basically, there wasn't any real finalized agreement. They stated